Hey everybody, my name is Brandon from thestockcenters.com, and today I want to talk about Tesla stock, ticker symbol TSLA, and how it is down over 30% in about 5 months. So now let's get started. We're on Google, and here's a 6-month view of Tesla's charts here, and we can see that in about 5 months since the all-time high, we are down more than 30%. So the question is, why is Tesla down 30% in about 5 months? And to answer that question, there are a couple of macro environment factors that you have to consider. The first thing I want to talk about in the macro picture is cryptocurrencies, because that is something that I think has been causing some flight away from Tesla recently. Because Tesla has previously made a big deal about putting Bitcoin on the balance sheet, the correlation between Tesla and the cryptos are now obviously higher, meaning that cryptocurrencies will now have a larger impact on Tesla's stock price. Obviously, because of the incredibly volatile crypto environment that we are in right now, and because Tesla has made a big deal of holding Bitcoin on the balance sheet, that could explain at least some of the price action that we are seeing in the past week or so when Bitcoin had a few days of dropping greater than 10%. So that explains this most recent history in this Tesla stock price here. But what explains the drop from the all-time highs up here down to these levels over here? Well, in order to understand that, we first have to look at this price to earnings multiple on Tesla, which is coming in at around 611. That means that the price of a single stock is about 611 times the earnings per share that Tesla is making. And that is a very expensive by any metric. The reason why this PE multiple quote unquote makes sense is because of the future growth potential of the company to capture a large portion of the automotive market, and also because of their future battery technology. The thing that you have to consider closely when looking at these high PE stocks is interest rates and the 10-year bond yields, because that is a measure of inflation, and the amount of inflation has an impact on the future earnings power of a growth story like Tesla. That means that if you believe inflation is coming, $1 tomorrow is worth less than $1 today, or $1 tomorrow has less buying power than $1 today. So because Tesla is not earning any money right now, but it promises to earn a lot of money in the future, that future cash is worth less than if it were to be made right now. And if we remember sometime in February or March, over here, we had a few inflation scares, and that I think is what has slowed down the big train that is Tesla's stock. So with all that said, if we scroll down here to the news here, we actually see some pretty bearish sentiment in the stock. A lot of analysts are seeing the stock as overvalued at this point, and also note this Fox Business article noting that we are seeing issues with lawsuits about charging the batteries in Norway. I think we need to keep our eyes on this Norway story here, because the outcome that Tesla has to pay a fine per Tesla owner can become a big deal if more lawsuits pop up. So of course, these articles do have good points that they are discussing, and I encourage you to read about them. However, there are some bull cases for Tesla stock as well, such as the growth of the EV market in general. And again, I've said this before and I'll say it again, their battery technology. To me, sure, Tesla is a car maker that makes cars, but what I find interesting in their business, and is something that I haven't seen talked about enough yet, is their battery technology. If you believe in a green and environmentally friendly future, then we need batteries to make that happen, and I think Tesla is in a very interesting spot right now, especially because of SolarCity, a subsidiary company of Tesla that's focusing on solar power. However, similar to the car making business, a lot of new companies are coming out to try to eat Tesla's lunch here. You have GM, you have Ford, Volkswagen, and even NIO. There are many companies, very established companies, who make and sell so many more cars than Tesla, trying to be all up in Tesla's space. If someone wants to invest in Tesla, they need to keep in mind that the competition for EVs will become harder over the next few years. However, that EV market will continue to grow. So even if Tesla loses market share, they may still be able to grow their business significantly because the overall size of the pie is growing. Again, something that investors should consider heavily. So with all that said, now let's head on over to the most recent earnings report to see how Tesla is doing fundamentally as a business. So here we are in Tesla's most recent earnings report, and we can actually see that things are looking pretty good here. Automotive revenues here are increasing by over 75% year over year, and that is pretty fantastic. But most importantly, look at the automotive gross margin here. We can see that we are at 26.5%, increasing quarter over quarter and year over year. and 26.5% is quite good for a car company in general. Something I want to note here is that when we look at these gross margins, we can see that they're quite varying quarter over quarter. And what that's telling me is that Tesla is still probably trying new things with their supply chain and their process, trying new ways to improve the efficiencies in their business. So obviously sometimes your changes may be less efficient, like last quarter, or sometimes it may be more efficient, like 2 quarters ago. But the point is that they're trying to find efficiencies, and that's what I like to see in a company. But of course, other things could have been affecting these margins as well, such as raw material costs. So you can't really look into that much. Moving on here to the expense block here, we can see that operating expenses is growing year over year at around 70%, which is quite high. But that's explained away because when we look at the total revenues here, we can see that we are growing total revenues by 74%. So that makes sense that we're spending more money to operate that business if we have more business. Also, it looks like we found some efficiencies year over year because our growth in revenues here is more than that of our growth in expenses. So what that's telling me is that because we are spending less to make more, we should be able to capture more of this revenues here. And if we look down to the net income here, we can see that our net income is growing fantastically over 2,600% year over year. So honestly, that percentage number is a little misleading because that is coming off of a pretty small base, around 16 million. So overall, the fundamentals of Tesla do not look that bad to me, and I'm particularly happy to see the increase in growth rate of automotive revenues up here, up 75% year over year. That's telling me that the company is still growing and acquiring a lot of customers. So with all that said, now let's head on over to Tesla's trading charts to see if there's a level or two to buy Tesla if we want to buy some Tesla. So here we are in Tesla's trading charts, and we can see that we are in some pretty wide ranges here. Right now at the $600 level, I think that we are in the middle of a range between the $550 support level made from this, and these candles over here, and this upper resistance level from the low to mid 700s made from the tops of these candles over here and these candles over here. So I think right now investors do have maybe about 8% downside to the 550 support level and about 18 to 20% upside to the low to mid $700 resistance level up here. So this is kind of borderline risk reward to me. You do have some good upside potential with limited downside, and as always, that's something that investors should be looking for. But to me, if I was looking to add more to my Tesla position, the $550 support level down here would be the first place where I would be considering it more seriously. If we break this $550 support level, then we could make our way back down all the way to the 500 level over here made from the tops of this candle, or even the mid 450s, which are made from the tops of these candles over here. Taking a look here at the MACD, which is this chart over here, we can see that our MACD is about to turn positive, and that's a bullish sign. That's saying that our short-term momentum, which is this blue line here, is about to cross over our long-term momentum, which is this orange line over here. Because of that, that could trigger some algorithms to buy the stock, which should definitely help our upside potential here. Looking at the RSI, which is this chart over here, we can see that we are bouncing up from our oversold upwards. And again, that's a good sign for Tesla here. So technically, Tesla looks to be in a good spot, but remember that investors should also consider fundamentals in the story as well. There is some risk with the Norway lawsuit spreading to Tesla owners across the world, and that would definitely not be a good thing for the stock price if that happens. As an investor, that is definitely something that I will be considering heavily when making my decision, as well as interest rates and the potential growth for the EV sector. So that was my review on Tesla stock. Let me know what you thought about it in the comment section down below. If you have any questions or if you caught any mistakes, also drop me a comment down below. If you liked the video, please like the video. If you haven't subscribed yet, please subscribe. And as always, thanks for watching, and I hope you have a great day.